this is one video I'm really struggling to put out. My gut feeling is this investment makes sense, and that's why I've deployed quite a substantial amount of my capital there. But if you see some of my previous videos on commodities, you would really see them struggling in terms of viewership, and really takes the soul from me when I make videos that don't perform. So this is the last commodity video. I think I'll stick to that. This moment, if you look around YouTube, there's just so little coverage, so little interest on this sector. And if you see the prices for palm oil, for example, you realize that it's been tanking for the last 6-7 years at least, hovering between 2,000 to 3,000 Malaysian ringgit per ton. And actually, Malaysian ringgit has depreciated in this period. So who wants to talk about something that's so boring, and who wants to invest in such a sector? All the unicorns nowadays on the markets are all tech-based, and we should really worry whether we are over-invested into tech and under-invested into things that still matter to our day-to-day living, such as food. There are so many things that I still don't know yet because I'm not from the agricultural sector, but I'd still like to share with you what I have discovered as well as my whole thinking process. So if you think this can benefit you, help me smash the like button early so that we can push this video out to a wider audience, and hopefully you get my message and start deploying some possible investments over there. On a big picture, this map tells us 1,000 words. Malaysia is the second producer, and the biggest producer of palm oil is none other than Indonesia. So these two countries almost command everything that the world needs in terms of palm oil. And do take note, palm oil is the biggest consumed oil in the world. It's not soybean oil, it's not canola oil, it's not virgin oil, it's palm oil. Palm oil has many uses. It can be used for cooking, it can be used for biofuel. But palm oil leaves a lot of deforestation. That's why Indonesian governments have been trying to curb overgrowth of palm plantations, and that's for the good of Mother Nature. But let's go back to the key part. How do plantations make money? How do you make money when you invest into a commodities company? Two key parts. First, increase in production above cost. When you have more volume to sell, naturally you have more profits, correct? The second is increase in the price of the product that you're selling. In this case, we're looking at palm oil companies. How much is each ton of crude palm oil? Price is linked a lot to supply and demand, which I'll show you and really simplify it for you to understand the opportunity that is at stake. Today, I'll dive into 3 companies that I personally have invested into myself. Not deep diving too much into the numbers because it's a lot of garbage in, garbage out anyway. But I can still narrow down why there's a big case for it. Let's look at firstly, increasing the volume of production that is above cost. The first company that we look at is Golden Agri. This is the biggest cap company there is. If we see this chart, we'll understand that 9% of their plantation is still immature. The rest are either in prime state or old. And of course, prime means that they are the most juicy, produce the most fruits. So 9% of Golden Agri's plantations are still immature as of this moment. Let's look at the second company, First Resources. You realize that 8% of total plantations are still immature. 92% is mature, slightly better. So for First Resources, they share with us planted with nucleus, which is likely managed by themselves, and planted with a plasma. That is actually like a rural partnership with local farmers. You can see like a franchisee program. And First Resources is very likely a well-run company. Later, I will tell you a bit more on it. The third company is Bumitama Agri. And this chart tells you that only 3.6% of their plantations are immature. And 96.4% is old and matured. Which means, very likely for 2022, this company would be the most optimal producer. 5-10 years later, probably not. But at this moment, yes. And in any case, we're not talking about 10-year investment or few-year investment. We're talking about now. The problem is now. It's just like, if you can buy a derivative on a residential, the rental rate. And what we understand is there's a lot of supply issues from HDB BTOs. And that's why HDB rental rates are skyrocketing. You're going to make money if you are able to buy a derivative on HDB rental. It really is that simple. And I think Bumitama Agri makes a lot of sense. And that's why I have the biggest of it in my portfolio. I have all 3, but Bumitama I've allocated the most. Simply because we're talking about now, we're thinking about production now that can deliver outperformance in terms of profits. Now let's look at cost structure for a commodities producer, palm oil company. All of them, when they plant, they have to use fertilizers, correct? Fertilizer cost is skyrocketing if you check around. The second part is oil. They need tractors to run. Oil price is also skyrocketing. So cost is likely going to go up, the variable component of it. But a lot of cost is fixed costs. Warehouses, staff, machines, land use, you name it. Majority of cost is fixed, which means for such a business, if profits spike because the raw material price increases, you're going to see outsized returns. Very simple. But actually, all this is still not important. We'll let Mr. Market tell us whether this sector is favored, and if it is, we allocate towards it. Later, I'll show you what I think of it. Now, let's go to the second part of it. Now we see production volume. The second part is price, correct? And price of any raw material is always affected by two things: supply and demand. Let's take a dive back in history. 2008 commodities boom. That was a period of underinvestment for the whole of 2000. You can see over here, this is the palm oil price again. I've circled in green. For the preceding few years, it was all flat, which means, again, not many investors are interested to deploy money towards a plantation. It's old school. Then what we see is a price spike, but then price crash or normalize to a more inflation-adjusted value. But what we see now again is 2013 to 2018, prices were again flat on the commodity, which means underinvestment. Nobody's interested in it. And just to speak on the previous boom, it was a demand-driven boom. That's why 2008, the price spiked. China was going industrialization. For a tight moment, there was a lot of demand, and that's why prices spiked. But what we can see right now is two key factors that's causing this massive spike from 2,000 all the way to 6,000 ringgit per ton. In 2020, we have massive lockdowns, also in Indonesia and Malaysia. This, I term it as COVID-related supply drop. Supplies drops, price has to go up because there's the consumers. We still need to eat, correct? We still need to fry food. We still need the biodiesel. So that is a COVID-related supply drop. Now what we are seeing is a war-related demand spike. Follow me on it, I'll explain. What I mean by COVID-related supply drop can also be seen in here. This is a 29 December 2021 forecast. They said that COVID-related supply drop is going to ease. Farmers are going back. Government is allowing industrials to move again. That's why they believe palm oil at that point of time before the war, it will start to come down a little bit. But what do we know? We have now a war that's causing a spike. And what is the spike related to? Is palm oil grown in Ukraine? No, right? But what we can see is Ukraine actually grows two key things. The first is soya bean. The second is sunflower seed. These two are alternatives that can make oil. And if you take note the green bar over there, you'd see that they are planted in April. As of this time of filming, we're very near April already. There is very little chance that the farmer can go onto the farm and plant. And even if he is doing that, he's probably planting for his own consumption. He has no logistics to send it to a wholesaler to export it. All the ports are being attacked right now. And it might even persist to next year. That is the key part. So if we drive back to our chart over here, realize that COVID-related supply drop is causing the spike. War-related demand is causing another spike, which could still have more legs. But the key part is this. If we remove both of these, isn't the baseline for 1 ton of palm oil going to be about 4,000? That should be it, right? And with that assumption, we can actually do two things. We can use a dividend discount model to work out how much each share should be worth for Golden Agri, Bumitama Agri, or First Resources. Or we can take a simpler approach, which is to use an average price to earnings to make a fair value guess. Let me show you two that I'm the most interested in, Bumitama Agri and First Resources. These two have shown an average price earnings of about 12 to 15 times. And if we assume that earnings will drop because 4,000 is the average rate that's going to be for palm oil, then we adjust that price earnings a bit higher. Is it possible that we can justify that the price of these two companies are still cheap? How I approach investments is really a very simplified approach. Bear case can be tolerated, which is price drops down to 4,000 average, fine. Earnings start to dip a little bit, but again on price earnings value, it's not expensive against history. Then all the rest of the bull upside is up for grabs. What if the war persists until June? isn't the supply of all sunflower oil from Ukraine going to evaporate? Ukraine, by the way, supplies 46% of the world's sunflower oil, and sunflower oil is the second most consumed oil. So there's a big gap in terms of cooking oil needed by the world. And what if we see bad weather? In Brazil, for example, Brazil produces 32% of all soybeans. El Nino, that is a natural phenomenon. Things can change in climate that can affect production of soybeans, and again, demand is going to come in because soybeans are out of picture. We need more palm oil. These kind of black swan events can pay off very big if you get it right. Hear it carefully. Just now I mentioned about dividend discount model. If we were to use dividend discount model, we can try to put a price to each of these three companies. But I've done certain homework. I realized that the dividend is very erratic. Golden Agri's earnings is even erratic. First Resources and Bumitama Agri are fairly stable in earnings, but their dividends still hover. It's still not a straight line of growth up. And what we can see is 2021 was a record dividend year for each of these three companies. That is good. Industry-wide, the tide is rising. And very likely for 2022, the dividends is going to be even higher. We've probably not reached the peak of dividends because price of palm oil is still now hovering around 6,000. Where in 2021, the average selling price for all of them was between 4,500 to 5,000 ringgits per ton. But again, we're not talking about 10 years. We're not talking about a few years. I was thinking a dividend discount model, we're going to have a lot of assumptions in, and it's not easy. Is the squeeze going to be real? And what is the max that it can stretch to? Let me show you something that I look at, which is the price to book value. If we plot out the tree, we'll see that there's price to book value expansion across the industry. Unanimous growth. We start with Golden Agri first. It's the cheapest in terms of price to book, but again, the earnings historically is erratic. The good part about Golden Agri, they have gotten a mandate to do up to 100 million in terms of share buyback. That is good. That creates demand for the share, which keeps the price of shares strong. But let's look in terms of operational performance. First Resources, I mentioned, is a good company. They do upstream plants and downstream mills. And if you look in terms of history, they have probably the best margin consistently. I'm looking at First Resources to climb to the top end of their price to book valuation. What about for Bumitama Agri? It is probably the best producer in terms of this year's production. And Mr. Market is probably favoring it the most. That's why share price wise it's performed the best. I'm also looking for it to climb to the top end of the price to book valuation. Now these are things I look at in terms of research and deciding which sectors to allocate more. That's how I've identified gems before, such as Propnex, Malaysia Smelting Corporation Berhad, and most recently, the Hourglass. You see the share price of the Hourglass, you realize that there's certain consistency in how I can identify. And if you'd like to learn some parts of it, look for my course links below to enroll for a fully online course. All proceeds from this course will be donated to NTU via the Georgetown bursary. Now I've spoken to you here and given my case on palm oil. I've even done a previous tutorial before, but as I mentioned, I'll probably be covering more hot topics such as Chinese tech, Sea Limited, and probably doing back more on retirement planning topics, which I'm very good at. So if you are keen for those, smash or subscribe, and I'll see you when those videos are released. Take care and invest safe. Goodbye.